Hello and welcome to the market analysis segment of Up in the Air for the week March 15th. I'm JP Nicola and we'll be providing an analysis of soybean futures prices.
And I'm Hannah Seeger and we'll be giving the natural gas future analysis. These are two very weather-sensitive commodities and therefore we hope to elaborate on how the weather patterns will affect prices in the future. JP will now take it away with the soybean analysis.
Soybean meal futures hit their lowest price in nearly 5 months last Wednesday at $317.2. This is much in part to the ample supply in South America. In fact, farmers in Argentina have held in reserve about twice the amount of soybeans this year compared to last, thanks to high inflation and low world soybean prices. As was noted last week, the soybean meal futures for May 2015 continue to remain below the 20-day average of 331 at around 325. Stocks in South America continue to look attractive with the strengthening U.S. dollar. Argentine and Brazilian currency continue to weaken to the U.S. dollar, but have leveled out over the past week. The leveling out could help world exports of dollar-dominated commodities by making them look more affordable to buyers in other currencies. This could be a potential reason for the rise in futures prices last week. With Brazil and Argentina harvest underway, the U.S. is now losing exports due to the affordability of South American soybean meal, and might even see cancellations in the coming export sales reports. From a weather perspective, below average rainfall over the past week in the growing regions have been favorable for the harvest period. This trend looks to continue in southern Brazil and Argentina, coupled with cooler, below-average temperatures. In Mato Grosso, however, wetter conditions along with average temperatures are being forecasted. Off to Hannah with the natural gas report.
1. As the winter comes to an end, natural gas traders are looking closely at the weather to see where the prices will take them in the next few weeks. Last week, prices took sharp turns with a low on March 16th at 2.754 and a high of 2.982 on March 18th. This was a result of some spring weather peeking through right before a late-week storm system brought some snow to the northeast on March 20th, which caused the prices to rise. Forecasting weather maps were updated this past Friday, which showed temperatures to remain mostly normal for the U.S. for the next 4 weeks. Although it shows temperatures below average in the northeast, climatological averages for this time of year will minimize the heating demands caused by shots of cold air. As seen from the wind chill map for the end of March, the country could see temperatures well below normal in the mid-Atlantic, which could result in a spike of heating demand. On Thursday, natural gas prices lost nearly 4% after government data showed that U.S. natural gas supplies fell less than expected last week. The natural gas withdrawal was 45 billion cubic feet. The storage is approximately 507 BCF higher than it was this time a year ago, but still 161 BCF lower than it was in the 5-year average. As the expiration date of the natural gas futures gets closer, the price is expected to become more volatile. Therefore, close attention should be paid to the temperature outlooks across the Great Lakes and Northeast due to population and heating demands.
We hope you enjoyed this week's market analysis and found the content informative.
Be sure to tune in next week for more news on the current state of natural gas and soybean markets.
For Up in the Air, I'm JP Nicola.
And I'm Hannah Seeger.